Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and today we'll focus on investing in exchange-traded funds. To understand what the ETF market in India is like, how do the ETFs in India compare with global ETF markets, what is the risk associated here, what are the growth levers going forward, we have Siddharth Srivastava, Head ETF Products and Fund Manager at Mirae Asset Investment Managers, and Tarun Birani, the founder and CEO at TBNG Capital Advisors, joining us now on the show. Gentlemen, good afternoon. Thank you so much for joining in. Well, ETF, there have been a lot of changes that we've seen recently. It's the big buzzing word as well. So let's try and understand that first up. Tarun, let me begin with you. How big is the ETF asset class size in India? How does it compare with global ETF markets?
Good afternoon, Sonal, and thank you for having me on this show. And just to give you a quick background about the Indian ETF market, this is growing significantly with ETF or indexing constitutes now almost 13% of almost mutual fund industry AUM, approximately like 10 lakh crores right now as we talk. However, compared to the global ETF market, which has surpassed almost like $10 trillion in AUM. Indian ETF, it's still, I would say, is at a nascent stage. Again, this disparity highlights the enormous potential of the growth as Indian investors increasingly adopt cost-effective indexing and ETF ideas and building a more diversified exposure in the markets.
Okay, all right. So that is what the difference is looking like. Siddharth, welcome to the show. You tell us, how has it evolved? What have we seen in terms of growth? How is it comparing? Because we are still at a nascent stage, I believe.
Yeah, absolutely true. Like Tarun mentioned, globally, ETF industry is around $14.4 trillion. We saw inflow of around $1.4 trillion in last year itself, both from a usage point of view and products point of view. ETF industry has evolved significantly globally. In fact, right now, the share of passive in US market is almost 50%. It's more than the active funds in terms of AUM. What we are seeing in India is it's pretty nascent stages. We are still developing. For example, out of 8.27 lakh crores, which is the ETF AUM, majority is into Nifty 50, Sensex ETF, and gold and silver ETF. Almost 60% of the market share is sort of cornered by these four products. This is down from 66% 3 years back, but still significantly that is the segment where you see most of the AUM and volume. But interestingly, in last 2 years especially, we are seeing significant traction in smart beta products. If I add ETFs and index fund, a lot of products have come out in smart beta space, almost 79. The total AUM is almost north of 35,000 crores, with almost 28,000 crores inflows in last 3 years. Also, we are seeing some bit of thematic products, popularity of niche thematic products, which are not there in the active side, which are finding popularity like defense, tourism, electric vehicles, etc. So I think now what we are seeing is that apart from active versus passive debate, people are also looking forward to passive because a lot of innovation is happening on the passive side. Since we all know that because of recategorization of schemes, very few innovation can be done on the active side.
That's an interesting point, actually. More than active and passive, it's becoming a different debate altogether. That only means how deeper the market is getting, right, when it comes to different asset classes and availability for investors as well. Tarun, coming to you, we talk about ETFs seeing that growth, but is there a specific category or which amongst the ETF basket is seeing the highest traction? Are we seeing better traction in commodities, or is it still the equity ETFs that people are looking at?
So I think as an asset allocation strategy, we have 3-4 asset classes: equity, debt, gold, right? But if I look at from a indexing and ETF, I think equity is driving the growth in the indexing market or the ETF market because it is considered to be more cost effective and again ease of access to diversified equity exposure. So from that point of view, equity is the first. Then gold is also getting a lot of traction. It has given a great vehicle to a lot of investor. Instead of buying physical gold, you can actually build exposure through gold ETFs. And I think debt ETF, I would say, still gaining traction, but it is still very, very nascent in India. And times will tell if we can find this category has become large. But globally, debt is also a very, very large category in ETF. So I think equity continues to be the highest in the traction right now, I talk about.
Okay, so equities, that continues to be the big focus point. Siddharth, we have the smart beta investing, which is picking up as well. Is that seeing traction in the ETF space? What's been your take, the way folios have risen in the last couple of years?
Yeah, so like I mentioned that if we look at both index funds and ETFs, we have seen significant number of new products catering to these very specific strategies on momentum, low volatility, quality, equal weighing, etc. There are almost 79, 80 products right now in this space, providing a lot of options to the investors. So someone who's looking for a high risk, high reward strategy can go towards momentum and alpha based funds. Someone who's looking for a risk averse investment in equity can go towards low volatility based fund. And we are seeing reasonable traction in each of these categories depending on the risk profile of the investor. For example, as I mentioned that now very quickly this category has risen. 4 or 5 years back, there was just 200, 400 crores in terms of AUM. Right now, it's somewhere around 35,000, 38,000 crores with almost 27,000 crores of inflow coming in last 3 years. So this is a very evolving field. And like I mentioned that with new themes coming out, especially in new age automotive, tourism, defense, etc., the usage of ETF and passive products have evolved. People are looking forward towards using ETFs as a portfolio completion tool or as a way to target a certain very focused segment. And if we even look from a trading point of view, ETF trading has grown significantly. For example, now on a daily basis, 1,400 crores of ETF trades on an average. If you are only looking at equity, that number is somewhere around 500 crores. So you are seeing traction not only in terms of folios but also increase in trading on the exchange.
Okay, so there are different use cases that we are seeing with ETFs right now. Whenever we talk about returns, we have to talk about taxation. And like we have said, globally, ETFs have more traction than what we are seeing in India. So in terms of taxation, Tarun, let me come to you. There is a difference in US ETFs and Indian ETFs. How does it work? We have some withholding tax. There's something on dividends as well. If you can explain that.
Right. So let me first come to Indian ETF, and I think that's pretty straightforward. If you pick up Indian ETF or Indian index funds, the long-term capital gains are more than 12 months is 12.5%. Again, you have exemption limit has been increased to 1.25 lakh rupees now. Again, short-term capital gains are similar like direct equity, which is 20%, up from 15% in the last budget. Again, coming to non-equity oriented ETF like gold, international and all, the long-term capital gain more than 24 months is taxed at 12.5% with no indexation benefit available now there. And again, on the short-term capital gain, it is taxed at the marginal tax rate of the investor. Now, let's come to the US ETF. Again, Indian investor can pick up US ETF through two mechanisms. One is through a LRS route, which is subject to $2.5 lakh per year per account can be invested, which is again subject to TCS of almost 20% deducted at the time of investment. But there, in that structure, you have a long-term capital gain, which is for more than 24 months is taxed at 12.5%, and short-term capital gain, it is applicable at the slab rate. Again, there is one very unique structure, and again, dividends is subject to 25% withholding tax in US, offset against the Indian tax liability under the DTAA, subject to the country we are investing. And coming to another mechanism which Indian investor can use to invest in, let's say, US equities or US index funds is through fund of funds. So we have a lot of funds mirroring the Nasdaq, S&P 500, and many such structures. And these funds, more than 2 years, is available at 12.5% in tax rate. So according to me, these are very good structures for Indian investors, and that could be optimized for them. Yeah.
Okay, all right. So that's about the taxation bit. Let's come to you, Siddharth, because we've spoken about what are we seeing in India, but how have ETFs grown globally? Can we put some spotlight on that? How does it compare with what we've seen in India in terms of growth as well?
Yeah, so from a product point of view, obviously passive started as a very simple mechanism to replicate indices like S&P 500, Nasdaq, etc. Like in India, we started with replicating indices like Nifty 50. Now globally, we are seeing a lot of product innovation. For example, the smart beta story started globally in around 2010 itself, around 10-15 years back. And then we saw a lot of theme-based products getting popular because there were a lot of new disruptive themes which are emerging like AI, EV-based investments, blockchain, etc. And now we are seeing sorts of two categories which are getting very popular globally. One is derivative-based ETFs. So you have inverse and leverage-based ETF, which can allow you to take bearish or bullish call on the market. You have covered call and buffer ETFs. Then also one more category of ETF, which is gaining significant traction globally, is an active ETF. Almost $1 trillion of money has flown into active ETF, which basically is somewhat hybrid of active fund management in an ETF vehicle. So that is something which is very interesting, which is happening globally. In fact, you'll be surprised to know that in GIFT City, within the regulation, active ETFs are allowed. So we might very well see active ETFs in India also. When it comes to India, as I mentioned that we are a bit behind in terms of product innovation. People are still understanding how to use ETF and passive products in their portfolio. Nifty 50, Sensex, etc. in their core portfolio, smart beta and thematic products in their satellite portfolio or for tactical allocation. So we have some way to go, but I hope that we'll also see such innovative products in India pretty soon.
Okay, active ETFs, that'll be interesting to watch out for, and the way there have been newer products, there's so much for an investor to look at and invest in as well. So interesting times ahead. Gentlemen, a very interesting chat, but we have to slip into a quick break. On the other side, we'll continue our discussion, everything about ETF investing and more. Stay tuned. Welcome back to MF Corner. We still have with us Siddharth Srivastava of Mirae Asset Investment Managers-India and Tarun Birani of TBNG Capital Advisors to continue our discussion on investing in ETFs. Siddharth, we have spoken about what's working for ETFs, but are there some risks associated with this asset class? Why are investors still not warming up so much to this idea?
That's a great question. So first of all, ETF mitigates only active fund manager risk. The market risk remain. So investors should be very cautious about the passive product he or she is investing in, and the investment objective of the product should align with the investment objective of the investor. For example, there can be some niche ETFs which might be more risky than the active fund because they cater to a very specific market segment or strategy. For example, a momentum or an alpha strategy based fund on a mid cap will be obviously more risky, will have higher drawdowns than a mid cap 150 ETF. So investor needs to look at the method, needs to look on how the portfolio is created and whether the method aligns with what he or she is expecting and whether the risk profile also aligns with his risk profile. So that is the most important thing. And also since so many product innovation is happening, we have 232 ETFs in India right now, 260 index funds. These nuances matter, and hence one should look into the portfolio creation method and the typical performance cycle and risk profile of an passive fund also. Now, when it comes to obviously ETF buying and selling, I think people are now warming up to the idea. As I mentioned that we have seen 4 times increase in ETF trading on exchange in last 5 years. If we look at equity ETFs, almost 570 crores of ETF trade on an exchange on a daily basis. The folio number has risen to almost 2.3 crores, which is significant. But I think where the issue is that liquidity should actually increase more. There should be more buyers and sellers. And we have actually seen in several volatile days that ETFs struggle to track the market on a continuous basis. And that is one risk which investors are seeing, and one risk because of which ETF market has not grown significantly. What we advise investor is to check the real-time net asset value of the ETF. It is published on almost all AMC's website. It is also published on stock exchanges. Just look at that real-time net asset value before placing buy or sell order. And while you're placing buy or sell order, also place it with a limit price. So if you exercise these 2-3 very simple steps, your experience of buying and selling ETF will be much better.
Okay, take that point, and that's important for investors to understand as well. Tarun, coming on this, the same question, some of the risks that you think are there with this asset class, and how much should ETFs be a part of the portfolio?
So I think the first question, Siddharth, clarified very clearly, and I will just summarize those. First is market risk. Underlying asset and market movements risk continues with ETFs. Tracking error, I think difference between the ETF returns and the benchmark index performance. And the third one is the liquidity risk. I think Indian market is still at a nascent stage, and many ETFs currently doesn't have the adequate liquidity. So in times of correction or markets turmoil, at that point of time, we have seen liquidity becomes a challenge. So I think investors should take a very, very informed decision whenever they look at that. Another way to manage this is to go through an index fund route. The index fund route, you don't have a problem of liquidity because there, I think the fund actually buys and sells from you. So there, it's like a normal mutual fund. So again, investor hesitation often stems from lack of awareness about ETF as well as traditional preference for active funds. So that has been the big reason. Now, I think on your question about how much ETF should be part of investor portfolio, I think I will go a little deeper in this and go more from a financial planning perspective. I feel it can be 100%. Indexing or ETF can be 100% of your portfolio. Why 5%? Why 10%? I think it can, because you actually have all the asset classes available, right? From debt, equity, gold, all the real estate. Also, I think innovations are happening there. So actually, I think indexing or ETFs can actually take care of the entire portfolio for the client. I think from a objective basis, again, it can be core allocation for diversification. Again, cost efficiency is there, flexibility in portfolio design. But let me start with a conservative portfolio. If anybody wants to build a conservative portfolio with capital preservation with moderate growth, I think bond ETF, balance ETF can be picked up because that will give them the conservative approach. For a growth-oriented investor, you have indexes and ETFs which can track equity, sector thematic indexes, international ETF. Again, this can be like 50 to 70% of the portfolio. For retirement planning perspective, again, these indexes and ETF can be used for income generation, and equity indexes can be used for inflation adjusted growth that can help build sustainable corpus. Again, for short term goals, bond, money market, index, ETFs and all that, which again is an nascent stage in India. But as the time will come, in US, you are seeing a lot of traction there. Again, the big advantage of ETF or indexes in financial planning, when I look at for my client, is transparency, liquidity, rebalancing, flexibility. Again, in active fund manager keeps leaving jobs. Again, here you don't have any problem. You are buying the market. So it gives me a lot of visibility for portfolio growth. Yeah.
Okay, take that point. That explains your insights as well. So that would have asked you the same question, but we are completely out of time. But keeping it for the next time. Thank you so much, gentlemen, for joining in today and giving us all those insights and expertise on what's happening with the ETF market. With that, we'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.